Well, the big beautiful bill is now officially law, and I want to go over my two favorite provisions that help small business owners in tax year 2025. That's right. This year, these two provisions will help you on your tax return. I'm Mat Sorensen. Let's build wealth. All right, the first one I want to go over is bonus depreciation. If this bill didn't pass, you wouldn't have got this benefit in 2025. Now, what bonus depreciation is it's a way you can take an expense for buying some asset in your business and take a full write-off for it in the year you acquire it. Generally, assets like equipment or vehicles in your business, you have to write off over time. Now, in prior tax legislation, this bonus depreciation concept was introduced. And for tax year 2025, the maximum bonus depreciation you could take is 40% of the value of that item. So let's say you bought a piece of equipment or some qualifying vehicle for $100,000. Well, you could take $40,000 of that now in tax year 2025, and then you'll take the rest over time depending on the depreciation schedule of that asset. Maybe it's over 5 years or 7 years, you're taking the other $60,000 per year over time. However, under this new law, for tax year 2025, you can take 100% bonus depreciation. Now that qualifying vehicle or equipment you bought for $100,000, you can take a $100,000 write-off in tax year 2025, reducing your 2025 taxable income. Now, this is whether you pay cash for it or you go and finance it and you only put $1 down. Hey, sorry to cut in here. I just want to make sure you know of my law firm, KQS Lawyers, where we help clients across the country save on taxes, protect their assets, and plan their estates. Get over to kqslawyers.com to learn more. We'd love to be of assistance to you. Now back to the video. You could put nothing down, okay? As long as you are incurring the debt or expending the funds to acquire this asset, you get to take the full write-off of the value of that asset. So if you bought a vehicle that's qualifying with a loan on it, or some piece of equipment, again, and you didn't expend the whole $100,000, you still get to take the $100,000 expense because of the bonus depreciation all in the year of acquisition. Now, this is a huge benefit. This can help real estate investors, property owners, business owners, anyone that's buying depreciable assets in their business or in their investments. Now, the second one is the 20% deduction you get as a small business owner known as QBI. Now, some of you might be saying, but Matt, didn't I already get this? Yeah, you got it, but this was going to be the last year you received this. The big thing about these two benefits for small business, bonus depreciation and this 20% deduction I'm going to talk about here in a second, is these are permanent in the law. These do not have a sunset, they do not expire. This QBI, the 20% small business deduction you get on your business income, was gonna go away next year. So this has been the last year you would have got it. In 2025, QBI is still in effect and it will be in effect in 2026 and all of the years moving forward. Under QBI, we get a 20% deduction on our small business income. Now that 20% deduction is super valuable. Let's say you make $300,000 in your business. Well, that 20% deduction means I get a $60,000 deduction immediately off the top. I'm only taxed as if I made $240,000. Now this is huge. Now let's say you're in a 30% tax bracket Fed, 10% state tax bracket, maybe you live in California, so you're paying 40% total tax. Well, what does this mean for me? Well, this means I save 40% on $60,000. That is $24,000 of taxes saved because of that one deduction that everybody who is a small business owner, this is whether you're an S corporation, a partnership LLC, a sole proprietorship, you can get this 20% qualifying business income deduction. Now, C corporations, they don't get this QBI. Maybe you're a large company, you're going for QSBS or some other strategy because you're a C corporation. You don't get QBI, but the benefit that the big companies got in last tax reform was a permanent tax reduction of 35% corporate tax down to 21%. But for those of you that are S corporations, sole proprietorships, LLC partnerships, you got QBI, this 20% deduction, and it is now permanent in the tax code. You can rely on this huge benefit moving forward. So those are the two big ones. There's other tax benefits for business owners that can help you. Make sure you know the strategies that matter in your specific situation. Tax planning isn't about what Congress just passed. Tax planning is about knowing every strategy in the tax code that you can take advantage of in your specific situation, so you're only paying the tax you absolutely have to. Now, my law firm, KQS Lawyers, has been helping clients across the country make good tax planning for your specific situation. We'll look at your prior prepares your tax return, look at the entity structure you have, and make recommendations to help you better protect your assets and only pay the tax you absolutely have to. Please get over to KQS Lawyers if you want to get started on that and get a consultation. And also, please subscribe to the channel. I've got tips on protecting assets, saving taxes, and building wealth. I'm Mat Sorensen. We'll see you next time.